Hey everybody, I'm Rob Freeman and welcome back to Ensuring the Built Environment. This week we are answering the question, what is an ESG SPAC? Well, an ESG SPAC is an investment vehicle that is focused on environmental, social, and governance type of investments in the form of a SPAC or a special purpose acquisition company. And a SPAC is a company that has no formal operations, no commercial business operations, other than to acquire a target company that, in this case, would have a business model focused on solving an ESG problem. So it could be solving a problem related to climate change. Maybe it's a renewable energy company, an electric vehicle company, sustainable agriculture, some sort of carbon capture, or they're doing something else related to societal benefits. So could be a combination of ESG factors. But whatever the solution is that the company is providing, the SPAC, as I mentioned, is a company that goes public with the purpose of acquiring that target company. And then when the acquisition happens, that's what's called a de-SPAC event. So you have the SPAC, which is the public company that acquires the target company. And then when it's acquired and the two merge, that's called a de-SPAC, a de-SPAC. And you'll often see the insurance world talking about insurance for both the SPAC and the de-SPAC. And SPACs have benefits for the target companies and the sponsors that put them together. On the target company side, the benefits are that the target company, if it's on the road to go public, can sometimes save money and accelerate the process of going public, and maybe even achieve better valuation terms for the company and the founders and the employees and the shareholders than it would if it had to go through the traditional IPO roadshow. Now, on the flip side, the SPAC process it's established, but it's also a little less regulated than the traditional IPO process. So recently, with the run-up and the increased activity around SPACs over the last 24 months, the amount of litigation that's been happening due to shareholder class action lawsuits or shareholder litigation that it revolves around fraudulent or at least claims of forward-looking statements or financial projections that were unrealistic, or the investors feel that misled them, has caused litigation in the SPAC world, even in the ESG SPAC world, to go through the roof over the last, say, 12 months. And so if you are in the process of putting a SPAC together in the ESG space, you need to be aware of that. And when you're expecting to buy your D&O coverage, that you should be aware that there is increased scrutiny around companies in the ESG space and SPACs in general. Now, if we hope that SPACs can be a successful investment vehicle in the ESG space, and that they will actually do what they say they're going to do in providing actual climate change solutions that are beneficial and actually provide a tangible benefit, the sponsors and the target companies alike need to strongly consider the due diligence process, the team that they put together, the disclosures and cautionary statements that they make related to any forward-looking statements or financial projections, because the insurance world is increasingly looking at and scrutinizing and looking with skepticism at SPACs in general. And so it's helpful to have an expert in not only in the legal area and the business area, but also in the insurance world, so that you are using very precise language that is would not be, say, discounted or dismissed in the event of a lawsuit, where, say some SPACs that are being targeted now are using boilerplate language that doesn't really apply to the businesses that they're in, and a judge or a jury or the legal result may be unfavorable because It may seem as though they were trying to get around something instead of actually disclosing what they felt were the potential risks. So again, an ESG SPAC is an investment vehicle that focuses on environmental, social, and governance solutions and is in the form of a special purpose acquisition company. And they are probably going to continue to be used as a way for companies to go public that are providing climate change solutions. And if you are in the process of doing that and you're looking for directors and officers insurance, either for the SPAC or the de-SPAC or as a tail for either entity, please feel free to schedule an appointment with me at the link below this video. Thanks again for watching. I hope this has been helpful, and have a great day.